What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. So make sure you hit that like button if you enjoy this video. It really helps the channel grow. Thanks again to all those who continue to tune in. If you haven't already, make sure you hit that subscribe button and the notification bell as well. That way you are alerted when we release new videos. We release bonus content from time to time, but the videos like tonight's video, the nightly and weekend videos, we focus on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings or leap trades as well. So if you want to deeper dive into exactly how we set up our charts, broadening formations, levels of support, resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that. And if you want a quick reference guide, there's a free PDF for the STRAT in the description of this video. That is the base of our charting and trading method. So if you want that quick reference guide, go ahead and check that out. So, yeah, I do encourage you to watch the full video. We do go over triggers and targets, but we give insight on all time frames. So let's go ahead and take a look at the agenda for today's video. First, we'll go ahead and recap the price action from Wednesday, January 21st, and we'll zoom out like we always do to look at the week, month, quarter, and year. Finally, we will zoom back in to set our 4-hour markers for tomorrow, Thursday, January 22nd, as well as the triggers and targets. And then we'll do a quick review of the triggers and targets for the week, month, quarter, and year. All right, so if we take a look at the chart, we start on the 5-minute chart like we always do every day. This is how we can capitalize on our proven and repeatable strategy that we use. If you're not familiar with this channel, the strategy that we use is based upon our 4-hour levels, what we call our 4-hour markers: previous high a day, previous low a day, overnight high, overnight low. And then once price opens, that first traded price is what we call the opening print. And what we do after we get that opening print is we watch price action and we look for higher lows at or above opening print to get into calls, and we look for lower highs at or below opening print to get into puts. It's just a very simple way to get into some quick scalps early in the morning, or to get your foot in the door early for a longer trending day, right? So here we have a great example of the higher low at or above opening print. We have the 5-minute chart here once again. Opening print was 60.25, pressed pretty much up against overnight high, which was basically pressed up against previous high day. If we look to the left here and scroll down a little bit, we can see here is the last low for SOXL on the 5-minute. It was a higher low, so it had already started an uptrend going into the close, at least on the 5-minute chart. And then if we go ahead and take a look at today's price action, we can see obviously opened, quick flash to the upside, a little bit of a push down, next 5-minute candle, another little bit of a push down, but then the bulls gained traction. Looking at this 138.2 fib extension of the November 2025 range is what we pretty much bounced off of. And there we have it, the higher low at or above opening print. So as soon as this candle, the third 5-minute candle went above the high of the second 5-minute candle of the day, that locked in the second 5-minute candle as a higher low. And this was our trigger to get into calls. So we went ahead and entered calls again for next week. Here we got the higher low again here, and then finally got a lower high. And we went ahead and exited a majority of our position here. Catalyst essentially was Trump talking, right? But we did run into this daily broadening formation, and really you could see things kind of starting to peter out at that point, right? We were still kind of moving up, but slowly, right? This little piece right here could have been, I guess not really a rising wedge, but you can see how the bulls were losing steam here. So took profit on a majority of our position, the new position here. As well as took profit on one of our February calls. Is up quite a bit, and we wanted to go ahead and lock in a little bit of that profit and see what was going to happen with the rest of the day. Obviously, we went 2 up on the day, going above the previous day's high, so that did lock in yesterday or Tuesday, January 20th, as a higher low on the day chart. So we stayed in the rest of our February calls and beyond, really. Excuse me. As we've got some Julys and some January 27 and January 28 calls. But either way, we didn't enter puts for that downdraft. It would have been nice if we did. but it was more risk than we needed, right? We were above opening print. We're above overnight high. We're above previous high day. We were above last week's high. And yes, we were hitting this broadening formation, but at that point we had turned trend around, made a higher low. No, hadn't made the higher low on the 1 hour, but made a higher high on the 1 hour. So created this broadening formation on the 1 hour chart as well. We'll take a look at that in a second. But then you can see we came down, started to form what looked like a bull flag at one point, and we were actually kind of close to getting into some puts. You can see we're right at that opening print level right there, but obviously never had the trigger take place for us. So basically just kept watching, and the more we started to creep up, we look at the 1 hour chart, we saw that there was the opportunity for the higher low on the 1 hour. So I think it was like 12 or something like, no, it had to be 12:30 because it was right at the flip of the hour. Yeah, 12:30, 12:40, something like that. We got the higher low on the 1 hour. We entered some more calls to add to the position that we had here. Again, we only released or let go of a majority of the position. We still had some runners, and we just went ahead and added back to them. Just why not? Let's play the game. So we did run back up to this daily broadening formation, started to get this corrective activity up here, and we went ahead and took a profit on another majority of our calls there that we had made today, at least. Left some runners. Obviously, we got this little pullback at the end of the day. People kind of selling off. There were opportunities to make money in a couple of different directions today. So overall, a pretty good day. Let's go to that 1 hour chart so you can see what I was talking about there on the, let's get a better chart here. There we go. You can see, it was this 12:30 candle that we got the higher low on the 1 hour time frame. Let's make this a little bigger for those of you on phone. Oops, let's get it together. There we go. So this is Wednesday's price action. So obviously here was that push early in the morning, the big drop, but then obviously made this higher low here. As soon as we went 2 up on this candle above this candle's high, locking this candle in as a higher low, that's when we entered the second set of calls. So like we said, we didn't make a higher low, higher high to start an uptrend on the 1 hour. This is just a slightly lower low, just barely. And then we made a higher high. So for all intents and purposes, if we take, let's get the right tool out here. If we take and draw a line from there to there and from there to there, we have this 1 hour broadening formation here, right? Obviously skewed to the upside. The bottom one, pretty flat broadening formation, but again, it did create a broadening formation. So went from this broadening formation to an uptrend within the broadening formation. So now we've got to see, right, do we pull back again, make another higher low to continue this uptrend, or do we come back down and continue to expand the broadening formation, but to the downside, right? That's all we really need to look for tomorrow, again, because if we pull back, there's perfect opportunity to make a higher low, and even if we don't, we're coming from a higher high, which would just again create another broadening formation. So let me remove these real quick. But yeah, that's what we had from the 1 hour. From the 4 hour, we did make a lower low, right? But then now made a higher high. So again, another broadening formation type of situation going on here, where we've got this to here, and then this to here as our broadening formation. You can see we kind of wicked out of it, hit the daily broadening formation from before, but closed within this 4 hour broadening formation right here. At least the close was, right? We still wicked above it. So we'll have to see what happens with that tomorrow. But again, haven't quite started an uptrend on the 4 hour, but just have that broadening formation. So again, a pullback is really nothing to worry about, even if we come back and close this gap, because again, we're coming from a higher high and it's just a broadening formation. So still bulls in control here. I had a couple of days where it was, some pretty good entry. Yesterday was a good time to re-enter. This morning was as well, with as soon as we went 2 up on the day, locking in Tuesday as a higher low. But yeah, this overall a pretty good day. Let's look at the day chart, and you can see what we're talking about here. This is yesterday. This is Tuesday. That low is above this low, obviously making a higher low. So on the day, we've got an uptrend. So the day, the week, month, quarter, year, we're all quarter. Yeah, quarter we even started an uptrend again there too. So yeah, we're on an uptrend on everything the day and above. So you get these opportunities on the intraday charts to play the downside if you want to sell some calls, buy puts, whatever you want to do. But overall, from higher time frame perspective, day and up, we're just an uptrend, and that 70.08 is really what we're looking for. You can see we got close to the market maker's expected move high for the week up here at 66.47. So if you're not familiar with that level, make sure you check out our weekend video where we go into that with a little more detail. But we're also running up against this 200 fib extension of the April 7th bull flag. So again, reasonable with this monthly broadening formation here. Kind of poking above this weekly broadening formation, running into this fib extension. Maybe we start to see things slow down a little bit. We've had a nice push, right? So, nothing to worry about. If we zoom out just a little bit to get a little bit more perspective. Sorry for those of you who are on phone who might not be able to see this quite as well, but here's basically the range of November, right? From the high to the low, or October high to November low. So for 2-3 months we were going sideways in this range. We're popping out again. Even if we drop back down to this $50 level, if we find support, even if we wick down, maybe close this gap, maybe even close this gap, but find support and continue to push up. Right now we're just looking at a base, right, as turning previous resistance into support, and we just continue to move up. So pullbacks are not the end of the world. Zoom out a little bit more. Let's take a look at the week chart. Higher high, higher low in terms of just pure candle structure. So again, coming from higher low, higher high here. So we're just continuing this uptrend on the week. Not a whole lot more to look at with that. If we are able to continue to break through this monthly broadening formation, we do have a little bit more resistance around this 72 area. That would be after reaching the magnitude for the quarter and year flip as well. So again, look to see some resistance here, if not a pullback, some sideways action. So we'll continue to watch how things move coming up here in the near future. But uptrend here on the week. Flipping to the month, same thing, right? November was look at a clean chart over here. November was the higher low. We obviously went above October's high, so higher low, higher high, uptrend on the quarter. On the month. No real strat reversal that we've already completed that, but we're just continuing the trend upwards. On the quarter, we are in this strat reversal, this one combo 2 down, combo 2 up. If you're familiar with this channel, you may feel like we're beating a dead horse at this point, but we've got new viewers every day, so we've got to make sure that we cover everything. 1, 2 down, 2 up, one of my favorite reversals, because the magnitude is not the high of the one, but the high of the candle to the left of the one, and we can see that is this big bearish engulfing candle from 2024, third quarter 2024, and the high of that candle, 70.08, is the magnitude for that move. So we're well on our way, less than $10 to get there, and looking good for continued push up. 74.21, 74.21 is all-time high, so that kind of plays out with the let's go back to the chart, with the resistance that we were seeing here with the broadening formations up here around the 72, 73 area as well. So that all starts to play out. If we look at the not the month, we've already looked there. If we look at the year, get our clean chart out here again, obviously like we talked about, we're in this 2 down, 2 up reversal. We went 2 down in 2025, but now we've gone 2 up, and with that reversal, the magnitude of that move is the high of the candle to the left of the 2 down, which again is that 70.08 level. So 70.08 being that magic number, right? So that's what we've got from a zoomed out look, as well as what happened more on a more granular level for today's price action. Let's go ahead and bring up the charts in anticipation for tomorrow and talk about what we will be doing, right? So first things first, we'll start out on the 5-minute chart and start with our 4-hour markers. There we go. Obviously, we've got previous high day, previous low a day, overnight low, overnight high. Overnight low will probably change overnight. Don't know where those will be yet. And then we'll say we have an imaginary open somewhere in the middle of overnight price action, right? So Again, if you were paying attention at the beginning of the video, if you skipped the beginning of the video just to come to this part of the video, that's fine. The rule is higher lows at or above opening print, get into calls. Lower highs at or below opening print, get into puts, right? Now, obviously, there's some nuance with that, but those are the basic rules. Make sure you're watching your risk to reward profile. Make sure you're not jumping into some 1-to-1 risk to reward. Look for at least 2.5, 3-to-1. I would say 2.5 to 3-to-1. But anyways, if we get this opening print, we push up, maybe we get a little rejection off of overnight high, previous high day area, and we come back down, we get a higher low. Then you want to go ahead and enter calls. Not a lot of magnitude to the upside if this is how it plays out tomorrow, right? First target would be overnight high, second target previous high day. For the proven and repeatable strategy for scalping and early entries, those are the targets: overnight high, previous high day to the upside. Now to the downside, we've obviously got more magnitude there. So if we open and we push down, maybe we get a little bit of bounce off of this fib extension that we got a little bit of bounce off today, intraday, and kind of close that at the end of the day. Say we get a bounce there and we come back up, but we get this lower high at or below opening print and start to push back down again. That's when we want to get into puts, right? Targeting overnight low and previous low a day. So obviously a lot more magnitude to the downside. But even if we go to the upside and there's not a lot of magnitude, if we go up to the upside with a lot of momentum, then we just start to look at the triggers and targets we have for the higher up time frames. But just from a scalping perspective, early entry perspective for a day trade, higher lows at or above opening print, looking to get into calls. Lower highs at or below opening print, looking to get into puts. Let's go to the 4-hour chart. Excuse me, 4-hour chart and a cleaner chart. There we go. And let's talk about the triggers and targets for the 4-hour time frame and up, right? We can kind of work off of the smaller time frames, which is higher highs, lower lows, things of that nature, with the 1 hour and under, in accordance with the proven and repeatable strategy. But once we start getting to that 4-hour mark and we start going 2 down on the 4-hour or 2 up on the 4-hour, making a move that's more significant for the full day trade or even an overnight swing trade. So if we're looking at it, if we get priced to the downside in the first 4-hour candle of Thursday's action, and we go below the second 4-hour, that triggers obviously this 2 up, 2 down, triggering at the low of the second 4-hour candle from Wednesday, and magnitude being the low of the first 4-hour candle from Wednesday, right? So decent size move there, like we talked about, to the downside. And then if we reach previous low a day, obviously we've got a gap on the 4-hour chart. It's not there on the day chart, but we've got a little gap on the 4-hour chart. And then obviously last week's 50% level and the week's opening print are right down here as well. We've talked about how testing the 50% level of the previous week is usually a good indicator for the rest of the week. We got a nice little bounce off of it. So do I expect us to come back down and test that? Probably not. Even if we pull back down in the first 4-hour of Thursday's price action, I do expect some type of higher low around this area to push back to the upside. But again, we're not into making predictions. We just set triggers and targets for both sides of the equation, and once one triggers, then we go with it. So got some magnitude to the downside, but we've got momentum on our side to the upside. So if we do go 2 up tomorrow, it's just 2 up continuation, targeting first obviously market makers expected move high, and then we get into our further out targets that we'll look at here in a second when we go to our notes. If we look at the day chart, kind of a similar situation, right? There we go. If we go 2 down, then we get this 2 up, 2 down, just triggering at the low of Wednesday and the magnitude being the low of Tuesday, right? So another decent sized move. And if it does make that move, it does reach magnitude, right? Then we're testing that 50% level again. And that gap is becoming a threat once again. So we'll see if that happens. We're getting positive push to the upside in after hours. But you never know. There seems to be quite a bit that can be a catalyst with the geopolitical stuff going on and all of that stuff. So just be ready for both sides. If we go to the upside, it's a 2 up continuation. Again, looking at market makers expected move high as a possible target, and 67.39 is last year's high as well. So that would be the next target to strive for. All right. let's just go to those notes that we were talking about here. We've looked at the charts quite a bit. Let's look at some hard numbers, right? So this is for Thursday, January 22nd, 2026. There will be 238 trading days left in 2026 on Thursday. The close price on Wednesday was 63.48, and we know that the week is green, and it does not turn red until we go below 57.34. At the same time, the month, quarter, and year are green as well, and it would take going below 45.13 to turn all of those red. We know the week's expected move from the market makers is $5.72, plus or minus from the close on Friday, giving us a range of 66.47 to 45.03. Again, if you're not familiar with this expected move, check out our weekend video where we dive deeper into this. We closed our gap above, so we've got no more gaps above, but we've got plenty gaps below. So we just always want to make sure that we're aware of where those are. That's why we keep those in our notes. And then from a scalping perspective or an early entry perspective into a day trade, we're looking for higher lows at or above opening print to get into calls, and we're looking for lower highs at or below opening print to get into puts, right? We talked about on the 4-hour time frame, if we go to the downside, that gives us a 2 up, 2 down, triggering at 61.37 with a magnitude of 59.46. Say if we've got some catalyst going on, then we've got these extended targets here, 58.72 and then 57.79 is that gap close. If we go to the upside on the first 4-hour candle, that gives us a 2 up, 2 up continuation, triggering at 65.11, and we've got these extended targets of 66.57, 67.39, and 68.02 for the 4-hour time chart. On the day, if we go 2 down on the day, that triggers at 59.46. That's the magnitude of the 4-hour move. If we trigger 59.46, then the magnitude of this 2 up, 2 down on the day chart is 57.72. Again, if we really get some momentum going to the downside due to some catalyst or something, we do have the extended targets here to the downside. To the upside, it would be, it's not a 2 down, 2 up. It's a 2 up, 2 up continuation. And I don't know what happened with my notes. There we go. There we go. All right. So on the upside, on the day chart, if we go to the 2 up on the day, meaning we go higher than Wednesday's high, that triggers at 61.05, and we've got targets to 62.19. Wait a second. Why something happened with my notes on the day? Let's go ahead and fill them in together. Yeah, that was not looking right. 65.11 is our trigger. Why did I have that? Okay. I don't know, something happened with my notes, but those are 68.2, and let's go back to the swing chart real quick so we can get another 68.56 is the other target. All right. Do a little bit live with you guys. There we go. Anyways, right, all the other levels that we talked about before are fine. To the upside on the day in these notes, right, we got 65.11 as the trigger, targeting 67.39, 68.02, and 68.56, right? Again, the higher high is at 70.08, which is the target for the quarter and year reversals, all right? But that's, at least through the day, these are the triggers and targets that we've got. Moving along to the week, today we did trigger a 2 up on the week once we went above 62.19. Obviously, we filled that gap, and we did actually go above this 65.04 as well. So extended target of 66.76. I believe we didn't quite make it today. So we still got that one out there, and then we're going to go ahead and add the other one from the extended on the day as well. I don't think that we'll get there 68.56 by the end of the week, but we've been running. Chips are definitely a source of strength in the market, so we got to have that out there. If we were to go bearish engulfer on the week, we'd have to get all the way down to 52.35. I don't think that's going to happen, but we'll see, right? Again, we talked about on the month, we went 2-1, 2 up, triggering at 50.09, already reached magnitude of 50.19. And, frankly, already reached our furthest out target as well today. So we'll go ahead and add the 68.56 on to the end of January, and 70.08 is going to be the next target there, right? So we've already reached some of these. we'll go ahead and cross these out. There we go. A little bit of homework live with you, no problem. All right, so we've got that on the month. On the quarter, again, we triggered the 1, combo 2 down, combo 2 up at 50.76. Next target would be 67.56. Obviously 68.56 would be next, and then 70.08 is the magnitude of that move. And then we talked about on the year, we did trigger 50.76, the 2 down, 2 up magnitude as well, being 70.08. If we reach that, then all-time high of 74.21 is going to be the high on, or the target on the year chart. Didn't get a chance this weekend to dive deeper into the charts to get those more extended targets once we're into blue sky territory, so I'm hoping to get that done either later on tonight or tomorrow, at least by the weekend at the very latest. So do prepare to see some extended targets out there on especially like the year and the quarter triggers and targets. It's just something that we've got to do at this point. Once we reach the blue sky territory, it's a little bit harder to judge just because you don't have, levels to the left that you can look at and see how price reacted at those levels. So we have to, kind of rely on broadening formations, Fibonacci extensions, things of that nature to help us out. But we'll definitely get that video out. But I hope everybody enjoyed today's video. These are your triggers and targets for everything from a scalping perspective all the way up through the 1 year chart. We try to jam in as much information as possible without taking up too much of your time. So we just ask for a free thumbs up from you all if you've made it this far. Maybe even share the video with someone you think it may help. That is our goal, right? We're not a monetized channel. We're not looking to get monetized, but we are looking to help out as many people as possible with some simple guidelines, right? We're not making this a whole big production, and we're not trying to be YouTube stars. We just want to spread a little bit of the information that we use that makes trading a little bit easier for us every day, right? Trading is never going to be easy, but if you can get on that easier side of the scale, that's the goal. So we hope that we are accomplishing that with these videos, helping people make trading easier. So sharing, liking definitely helps the channel grow. But we'll go ahead and end the video at this point, just like we always do every day. If you're watching this Wednesday night, we hope you get some good rest tonight, wake up refreshed tomorrow. And if you're watching this Thursday during the day, we hope you got some good rest last night and woke up refreshed this morning. And we look forward to getting out there and trading with you.